Hey, I'm Jusko from ProudMoney.com. In this video, we're going to answer the question, how often does my credit score change? But first, I'm going to ask you to please subscribe to this YouTube channel if you have not already, and if you have already, I thank you for doing so. So we have tackled this question in the far past, but we have a zillion videos, and the question continues to come up. So that means it probably needs an update. So the question is, how often does my credit score change? So there's sort of a technical answer to this, but there's also a question sort of behind that question. I think that other question is, how long is it usually before I'm going to see a change in my credit score when I do certain things that I think are going to improve my credit score? So we're going to kind of talk about both of those things in this video. So how often your credit score changes is going to depend on a lot of factors. It's going to depend on how many credit accounts or loan accounts you might have, how long your credit history is, how much change there is to any of those loan accounts in a particular month, and there are a lot of other factors as well. So your credit score could change technically every single day. If you have multiple accounts and they are reporting to the credit bureaus at different times throughout the month, well, then that means there's new information coming in on sort of a rolling basis, and that could change your credit score every single day. Possibly. Now, that doesn't mean that each one of your credit accounts or loans is reporting to the credit bureaus every day, because they're not. Most of them are only going to report one time per month. But if they're reporting at different times, that means that there could be changes throughout a month. And there are other factors as well. The length of your credit history is one of the big ones if you open new credit accounts, and there are things that affect your credit score even if you do nothing. Now, like I said at the beginning, the question behind how often does my credit score change often is, how long is it before I can expect to see some sort of change in my credit score if I'm doing some new behavior. So while your credit score could change on sort of a rolling basis and you might see some small changes, if you are looking for a more significant change, maybe you just paid off a big debt, or you at least paid a big debt down significantly and you're hoping to see it, oftentimes people think they're going to see that, in 2 weeks or whatever. And sometimes, depending on when things get reported to the credit reporting bureaus, when you get a score, whether it's a free score from somewhere or you pay to get your credit score, it may or may not have taken into account what you did. So you may think you're going to see it in 2 weeks, but it may be that you're not going to see it for 6 weeks, because it may be that it's really going to be a while before it actually gets reported to the bureaus and that you actually get a score that has that incorporated in. So oftentimes people say, oh, I did this and my credit score actually went down, or my credit score barely moved, or whatever. But sometimes that happens because you haven't sort of given it enough time for that to be incorporated into your credit score, and maybe you're looking at a credit score that is based on information that is older. All right, let's look at the 5 components that make up your credit score according to FICO, the company that originated the credit scoring model. So these are rough, but FICO says that the most important of those 5 components is on-time payments at around 35%. So obviously, making your payments on time is the most important thing toward getting a good credit score. And being late, and I don't just mean a day or 2 late, I'm talking about 30 days late or more, that is going to hurt your score significantly. Now, when we're talking about how fast or slow your score may change, if you have an on-time payment and you don't have much of a credit history, well, then any single on-time payment is going to have more of an impact, because the credit scoring model doesn't know a whole lot about you yet. So even one on-time payment starts to give them a little something to build on. And if your first payment on your first credit card happens to be late, well, then that tells them something bad right off the bat. On the other hand, if you have a longer credit history, well, then one on-time payment isn't going to have that much of an impact. So the shorter your credit history, the more any sort of on-time payment or late payment is going to change it, and the quicker it's going to change it as well. And again, remember, if you have multiple accounts and we're talking about on-time payments, then you may have those on-time payments being reported at multiple times during the month, which could cause your credit score to change multiple times per month. Second piece of your credit score, 30% roughly, is amounts owed. And amounts owed does not so much mean the amount that you owe in real dollars. It means how much do you owe in comparison to the credit that is available to you. So the less of your available credit you use, if you have a lower credit utilization is the term often used, well, that is better than if you have a high utilization. So if you're someone that carries a higher balance on a credit card or two and you pay that off significantly, well, then you can make a fast change to your credit score potentially. However, what sometimes people think is when they make that payment on their card, they expect to see that change very quickly. And sometimes, depending on when your credit card reported to the credit bureaus, they may still report that higher balance that you had before, and so you may not see that payoff immediately or that pay down immediately in your credit scores. So if you pay something down today and you look at your credit score 2 weeks from now and you're expecting it to have gone significantly down, it is possible that that pay down is not incorporated into your credit score yet. It may be that you need to wait another month after that to see that be incorporated and to see that change happen. So oftentimes people want to see that change very quickly and they think I did this and nothing happened, and so that gets them sort of in a frustrated state where if you waited a little bit longer then you would be able to see that change take place. And maybe this is so obvious that I shouldn't even state it, but if you have multiple accounts and you pay one of them down, you have to make sure that you're not letting the other ones go up at the same time. Otherwise, of course, you're going to counteract the one that you pay down and it's not going to have any impact on your credit score. Now, I said earlier that sometimes your credit score changes even when you do absolutely nothing, and that takes us to the next component of your score, which is the length of your credit history. So longer credit histories are looked at more kindly than shorter credit histories in the credit scoring models. So once you have established credit for the first time, every day that passes, you are getting a longer and longer credit history, at least from when things first started. So that means that potentially your credit score could start to go up just from the fact that your credit history is getting longer, even if you're not actually doing anything. Now, that doesn't mean you're going to get a point every single day when a new day happens. It doesn't work that way. It's going to be much slower. But when you take the length of the credit history and you mix it in with the other pieces we're talking about here, that can move the needle and get you some more points and get you to where you want to go faster. Now, obviously, if you don't make your payments on time or you do other things wrong, your length of your credit history is not going to save you, because then you're just going to have a long bad credit history. So you have to do the right things in other places, but as your credit history gets longer, as you make more on-time payments and all of the other good things, that is going to help your score. Now, when we talk about the age of your credit file having a longer or shorter credit history, there is sort of a side piece here that we should talk about too, and that is the fact that the individual items on your credit report also age, and some of them are older and some of them are younger. And the ones that are older actually have less of an impact than the ones that are younger or newer. So you might say, if I made 100 payments and 98 of them were on time and 2 of them were late, well, then it doesn't matter if the late ones were, just the last 2 months or if they were 5 years ago, but that's not how it works. What is older, even though it counts, doesn't count as much as what is newer. And so if you have a not so great payment history, maybe 4 or 5 years ago, but you have paid everything on time since then, well, then you've probably see your credit score go up. On the other hand, if you had a very good payment history for a long time and then all of a sudden you were late once or twice, well, then you could see your credit score head down fairly quickly, even though you have all that goodwill behind you in terms of on-time payments. The red flags go up when you make a late payment. And so there is a little bit of a what have you done for me lately when it comes to these individual items on your credit report. And so that can impact your credit score fairly quickly, especially if you are someone that has that better credit history and you suddenly have a late payment or two. And those older things on your credit report not only have less impact over time, eventually they fall off and out of your credit score completely. So after 7 years, the bad stuff, the late payments and defaults go away. After 10 years, the good stuff falls off. So when you're talking about looking at your credit file and having your credit score calculated, you could really think of it as being the last 7 to 10 years of your credit history. And after you've had credit for more than 10 years, well, you're going to be looking at the last 10 years, and the older stuff no longer even matters. Now, the next component of your credit score, FICO says, is only worth 10% of your overall score, but when it comes to moving the needle quickly and in a short time, it's actually more significant, and that is new accounts. When you apply for a new credit card or loan, you're going to get dinged on your credit score. You're going to lose some points, even if you get declined. If you are approved for that new credit card or other account, you then have a new account that comes onto your credit report, and that dings you a second time. So opening a new account can ding you quickly, and you'll see it in your credit report and in your credit score much more quickly than some of these other things that we've talked about. And if your credit history is short, it will hurt you more than if your credit history is long. So if you have a longer credit history, not a big deal to open a new account and lose, 4 or 5 points, maybe as much as 10 points. But if you have a shorter credit history and you potentially could lose, 20 points or whatever from a new account, well, then that could be significant to you. So this is something that also sort of plays into how often your credit score changes and by how much it's going to change. And then that last component of your score is credit mix, which FICO also says is worth 10%. But for purposes of this video talking about how often your score changes, credit mix is not going to have that much of an impact, and it's going to have that impact very rarely. So credit mix means whether you have a mix of credit cards and installment loans, or just credit cards or just installment loans. If you can handle both of those things and you have shown that, well, then that is going to help your credit score. If you only have one or the other, it's not quite as good. But the only time you're really going to see a whole lot of impact from credit mix is if you only had credit cards and then you got an auto loan or mortgage, and maybe that helps your credit score a little bit, but it's not something that really is going to have much of an impact on an ongoing basis. So with all that said, hopefully you can understand why your credit score could change every single day with multiple accounts that report at different times. If you have a shorter credit history, those things can move the needle one way or the other very quickly. But for most people, especially after you have established some credit history, your credit score is going to be sort of like watching grass grow. Yes, some things are going to happen, but if you were looking at it every day, for the most part, you wouldn't see a whole lot of difference. It's going to take some time before you can actually see anything of significance. Just as an example, looking at my own credit scores over the last year, or at least the last year as I am making this video, not a whole lot of movement. I do have 1 month where my score jumped 20 points. I don't quite remember why that was. I probably opened some new cards, or maybe I had a big balance on something and paid it off, but otherwise, things didn't move a whole lot. And I have 3, 4, 5 months here at the end where there was no change to my credit score at all, and that is with having multiple credit cards that I do actively use. So there is activity going on in there, but you wouldn't know it from my credit score. So your credit score is like a constantly brewing stew. The more things you throw in there, the more changes you are going to see. Some are going to have more of an impact than others. In terms of your credit score, if you have a shorter credit history, everything is going to have a bigger impact than if you had a longer credit history. So it could change every day, and the shorter your credit history, the more chance there is that you would see changes every day. Longer credit history, not going to see changes nearly as fast. That said, questions, comments, put them in the comment section below. Otherwise, I thank you for watching, and as always, please go to proudmoney.com, where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. Thank you for watching. Bye.